Hi, Kyle Gears here, Senior Customer Success Manager for Asset Managers at YCharts. Today I'm going to run you through some of our Q3 fund flow data to help analyze and spot specific trends or themes. We'll start out at a high level looking at broad categories where the clear-cut winner in Q3 was fixed income, 157 billion plus of net inflows. Two categories that led to that figure, intermediate core and intermediate core plus, which based on the data tend to be the staples or anchors of the fixed income portfolio, even though rates continue to rise. Next, you have equity, which a little less than that, it's 72.7 billion in net inflows. And down the list, you see green, meaning you see net inflows for all but one of those categories, and that category being commodities, which is interesting because commodities have had the best performance out of any asset class or category thus far year to date. If we break down equity into the 9 styles, we see that large blend has completely blown everything else out of the water. Investors must feel confident in large caps, and they might be sick of playing the game of growth versus value. If you take a look at a chart year to date, growth, blend, and value, you'll notice that blend has been the smoothest ride, least amount of volatility, and you get similar results. The other noticeable aspect of this chart is growth in general. You see outflows and growth across all three market caps, large, mid, and small. So the growth trade fizzled out in Q3 a little bit, but began to reemerge toward the end of Q3. So you might have some investors out there kicking themselves for exiting growth since it bounced back as of late. If we split that apart even further and look at mutual funds versus ETFs, this has been another common theme. We continue to see outflows in mutual funds. Sea of red up top across every one of the 9 styles, we see outflows in mutual funds. A lot of that money is moving into ETFs. Now, is it a matter of investors looking for lower expenses, or do they appreciate the passive nature of ETFs? Who knows? But the data is telling us that a lot of money is moving from funds into ETFs. On that same note, if you take a look historically, we have some interesting information from the Investment Company Institute, which shows historical flows for both US equity mutual funds and US equity ETFs. Now, the data is delayed by 2 months, but you can still see the historical theme. The key thing to focus on here is the spread or the disparity between ETFs, which are the black line, and funds, which are the blue line. But if we take a look at another asset class such as bonds, we notice that historically bond funds have seen a lot more flows and a lot more assets opposed to ETFs, although as of the last time this data was reported, which was the end of July 2021, we see that ETFs actually have overtaken funds. Last slide, we'll talk about sector equity. Now, we see real estate as being the top sector for flows in Q3. Might be a couple of reasons. One, real estate is a classic inflation play, tends to do well during periods of rising inflations, and you continue to see appreciation in the real estate market. Second, you have technology, which fell out of favor earlier this year, but it looks like investors are piling back in to tech. And the two that are interesting in terms of outflows tend to be consumer cyclical and industrials. When it comes to consumer cyclical, a lot of questions around the consumer and the future of the consumer. We've also realized that in terms of performance, consumer cyclicals have reached new highs as of late. So maybe investors are taking some chips off the table there. And then industrials, we obviously know there's a lot going on, supply chain issues, shipping issues. That has all led to industrials underperforming. A lot of doubt, a lot of questions around those as well. So once again, we've seen large outflows. They got beat down a little bit in Q3. Thank you for joining me during the recap of fund flows this month. We'll see you next month for another edition. And if you have any questions, please feel free to reach out and make sure you're subscribed to our monthly fund flow reports.